Oil prices seem to be stabilizing after a rather volatile first trading week of 2024. Brent crude is currently consolidating near $78 per barrel. The benchmark will likely end the trading week with the potential for further gains as supply risk persists. Yesterday, the U.S. Department of Energy reported a drawdown in the U.S. crude oil inventories. At the same time, data showed that U.S. gasoline stocks jumped to the highest level in 3 decades, reflecting energy demand problems in the world's largest economy. And this news in turn caused a short-lived slide in oil prices. Then, market participants shifted their focus to heightened geopolitical conflict after oil and ongoing protests in Libya forced a shutdown of production at the country's largest oil fields. The Israeli-Hamas conflict continued to escalate, causing unrest throughout the Islamic world and forcing oil tankers to change their routes to bypass the Red Sea. Besides, Iran decided to halt oil shipments to China, demanding higher prices for its products after Venezuela ramped up supplies to the United States and India. Meanwhile, gold prices are set to the end of the first week of the year with losses not far from the $2,040 per ounce mark. The yellow metal is under pressure from the greenback, which has gained ground following the revision of the Fed's rate forecast. Today, the price of gold also depends on investor sentiment towards the US dollar. Investors say waiting the US Labor Department's monthly employment report, which may prompt the US Central Bank to hasten monetary policy easing. Markets now see around the $65 chance the Fed will cut rates in March, down from approximately 90% a week earlier. Given that the ruble usually reacts to global trends with a delay and New Year celebrations continue in Russia, trading is subdued. The dollar-ruble pair is stuck in a narrow range of 92 to 89 rubles per dollar. Nevertheless, many analysts are confident that the ruble will start the new year on a positive note. Currency interventions by the Russian Central Bank are likely to contribute to the ruble's strengthening. In addition, based on the interest rate disparity, the ruble is in a more favorable position than the dollar. The Bank of Russia's rate of 16% per annum is expected to support the Russian currency and bring it back to 85 rubles per dollar by the end of the first half of the year. That's all for now. We continue to follow developments in the financial markets. Subscribe to our channel and follow news with us, and see you soon.